Welcome to Tradiers, the Trader's Edge. I am Jim Iuorio. That's Bob Iaccino. Thank you guys so much for joining us. We owe you guys so many thank yous. Both the shows we do have been so successful, so many eyeballs, and we love it. We love the involvement you guys have, all the DMs, all the retweets, all the messages on this live show. We appreciate very much. I know we normally open the show with some sort of smart ass comment because it's kind of what we do. Today's going to be a little less of that. There's something kind of serious we want to address first, and then we'll get back to our normal knuckleheaded tomfoolery. Is tomfoolery still a word they use in this generation? It should be, Bobby. You agree, right?
It should be, yeah. I think it's an Irish immigrant. I don't know what the fuck.
Could be. Okay, anyway, this morning I heard from a friend of mine on the ground who's been volunteering in Appalachia in North Carolina for the last 2 months, I believe it is, since Hurricane Helene dumped all that water on it. He said nothing has changed. Nothing has gotten better. There are still tons of people for want of food and water who are barely struggling to survive. He also said FEMA's not really helping, to the surprise of no one. So we are going to make a plea to you. And by the way, I want to thank Tradier for approving this and saying, yes, we want to raise money for these people. Melody Wright, I know some of you guys know her. She's very active on Twitter. She's a markets person. She has a GoFundMe page that we're going to put up on the banner here. If you want to donate to her, it's going to get around. It's going to get to the people who need it the most, because we are letting these people suffer for some odd reason that I cannot figure out. I mean, perhaps there was some indication that FEMA left certain communities alone because they didn't approve of their political affiliation. I personally don't believe that, but if it's true at all, it is absolutely unforgivable. But either way, every time we've made a plea for money from you people, you have responded beautifully, and we thank you so much. Bobby, would you like to add anything to that?
Yeah, I think one of the things that we need to do with our audience and with these kinds of situations is take these things seriously. You know, if you know that a credible person has a GoFundMe and you know that the damage is credible, Appalachia, North Carolina, that whole area really got the shaft in this whole thing. And I think it had a lot to do with it being election season. Regardless of where you stand politically, they should have done better. And I'm not going to blame a political party. I'm not going to blame an administration. At the end of the day, your community is who helps, and your community needs money in order to help the area that needs to help. So I think this is a fantastic idea that you had. I again thank Tradier as well as you do. Guys, if you can donate to this, you should. It's an absolutely excellent idea, and it's an excellent cause. Help your neighbors, man. It's not a bad thing. It's never a bad thing.
And there are moments where I think the community that we've built via Twitter, via social media, via media itself, one of the greatest things we do is we come together and help people out. We've done it for several different foundations. When Carrie Ingraham came on, she said she never received so many donations than after she came on our show, and we pitched what her purpose was and what her mission was, which was a brilliant mission. Well, this is different, but it's just the same. You guys got money, please part with it. I'll be hitting the GoFundMe page as soon as I see this video afterwards. Thank you guys for doing it. Now let's get to markets, or let's get to tomfoolery. Which would you rather do, tomfoolery or markets?
Start with tomfoolery. We got a lot going on with earnings that are happening right now. So
yeah, I know. So by the way, if somebody, because I think they're saying 420, which by the way, do they pick 420 as releasing their earnings because 420 is that magical time? I don't know.
Stop. We do have Snowflake right now, though. And
what is it?
Snowflake had some pretty darn good earnings. Okay, we're looking at their estimate being 15 cents. Looks like they beat that by quite a bit. Fourth quarter revenue, 906 million. To 911 million. The estimate was 890 million. Snowflake right now, which is SNOW, is up about 12.9% in the post market.
Wow. So Snowflake, I don't know what they do, but I'm guessing they're the parent company of that Blue Sky Social Media, which is a spot for people to come and whine about Trump winning the election, because Snowflake sounds like it would be the parent company of that. I know they're not. This is a joke. What does Snowflake do?
Let me look it up for you, because I'm not too familiar with it either. Let's see here. Snowflake.
By the way, for anyone watching us, we are not Jim Cramer. If you think we're embarrassed in the slightest that we're talking about a company that we may or may not trade and we don't know what it does, you are very, very wrong. We are mostly technical traders. I've traded plenty of companies that I don't know what the hell they do. I have fundamental thesis on a lot of them as well, but I have I feel no guilt on this.
All right. So Snowflake, first of all, Cramer is all right. I'm going on.
There's no market feel at all.
Yeah. Snowflake provides a cloud-based data platform for various organizations in the United States and internationally. Its platform offers data cloud, which enables customers to consolidate data into a single source of truth to
Single
drive
source of
people that,
truth.
I don't know. So they're basically cloud-based data and data compression and analytics is the way that I'm reading that. I don't know what cloud-based truth means.
We all love truth, though, right? I'm a
Yeah,
big
we all
fan
have
of truth.
big fans of data and truth.
Justice and the American way. All
Yeah.
yeah.
Now,
So
Palo Alto Networks, which we know what they do, right? It's security,
yeah, that's
online
my
security.
buddy. My buddy's the president. My buddy from when we were kids and played ball together.
All right, so
Yeah.
he's doing well because the stock is up 9% in the post market. I didn't see where the earnings came in, but as you comment on it, I'll have it.
Good. Yeah, I love rooting for him. He's a great guy. His name's BJ Jenkins. If anyone, I think he goes by, can't remember what the B stands for. I think he's Robert Jenkins now in the professional world. But we
Very,
played ball
very
together as
professional.
kids, went to Illinois together. He's a great, great guy. Okay, let's talk. This show is to be predominantly about energy. There's obviously disparate energy policy between the two candidates who were involved in the election. Okay. We perceive Donald Trump to be a drill baby drill president, which may or may not show up in supplies anytime soon. Can you break that down for us?
Yeah, so I want to start off by talking about XLE, right, which is the Spider Select Energy ETF. Okay.
Mhm.
And the reason I want to do that is because let's go since the election, right? Since the results of the election became clear November 5th, right? Or actually, let me rephrase that. XLE was up on November 5th by about, let me move this right here. Got everything in my own way today. Was up on November 5th by about 2/3%. Since that close, it's up 6.84%. Basically a gap up that looks like it's never going to be filled, right?
Right.
The ETF is now at its highest level since about April 29th of this same year, right? Now, at the same time, crude oil, not so much, okay? If you go from November 5th, again, let's go from the November 5th close here. Crude oil is actually down, that's the crude oil futures, by about 3.6%. So why would that be? Well,
hold it.
Yeah.
You were not going to give me any credit for 6 months banging this drum about what the Trump trade could be versus integrateds versus crude and that spread. You don't remember, do you?
All right, let me rephrase. So Jimmy has been talking about this for about 6 months, but I don't remember it. Okay. So you guys are going to have to go back and look.
People, by the way, if you guys are watching and remember it on any platform, tweet it just send it to Bobby because it's the truth. But anyway, Bobby, go on. Yeah.
Well, you look at drill baby drill, and that's great, right? Obviously, Trump has the ability to curb regulations through executive orders to allow these companies to actually go to town with exploration and drilling. He has the sole authority to issue new leases. He does not have the sole authority to go into places like national parks. But in terms of areas, President Biden's administration cut areas where leases could be released. Okay, he cut leases. Contrary to what a lot of people thought, there's 9,000 leases out there not being drilled. That's actually true. But those leases had already been explored, and those particular parcels of land were determined by these companies to not be profitable areas to drill at. So in other words, you'd have to have crude oil somewhere in the $140 range for those leases to be profitable. And regardless of whether those leases are being drilled or not, you're not going to get companies to drill in areas that are unprofitable, right? So drill baby drill starts off a chain of events that could lead to crude oil production and higher supply 6, 8, 12 months from now, maybe even 18 months from now. It's not something that puts a ton of supply on the market right now. So this turns out to be a situation where the integrated companies definitely have a profitable runway ahead of them. And because the stock market trades anywhere from 6 to 12 months in the future, the integrated, as Jimmy claims to have said that I don't remember, is the trade. Crude oil prices themselves, not so much yet. And the reason is that demand has not actually materialized. Right. When you look at refinery utilization, we're still in the low 80s, high 90s. And that to me is demand on the ground for crude oil. And that has not bumped up yet, simply because overall China has not recovered. There's a second part of the Trump administration, and that's the potential depression of China's supply. And we haven't seen any reason to think that the Trump administration is going to help with China demand.
So my thesis was generally based on, so how much of the pop in XLE is just that they are no longer in the crosshairs? We have to remember that the administration prior to us took every opportunity they could, not just to vilify fossil fuel companies, but to create this thing that they were like the devil and needed to be ground into the dust. There was a 1 week, 2.5 years ago, where the bipolar administration literally talked about restricting. What's it? The bipolar administration, right? Literally, you'll know why I'm saying, because you remember the story too. They literally talked about in Congress about passing a law to limit fossil fuels companies' access to capital markets and borrowing, and then the same week called the heads of these big companies and, hey guys, why aren't you guys drilling more? We need more supply. Like, what the hell is the matter with these people? It was just absolutely insane to me. So I thought that, and again, the big integrateds usually correlate very, very well to oil. Whether or not that correlation it should be there, it doesn't matter. It is. And I thought that correlation could break down a little bit because of a more favorable administration for it. I think I can probably prove it. But again, I didn't make much money off it. I was long the integrators, but I'm not short oil. So again, I guess I got the good leg. I got the good leg of it, but that seems like not nothing. Okay. Oh, I want to ask about the technicals. So the 66 level on the downside. We've been there several different times, and we've rejected it several different times. It seems to me that that's absolutely the level of importance. I personally think a settlement back above 70, we get some more upside. What are your thoughts on the technicals?
I think right now crude oil needs to sort of wash out to the downside. I really do. I have a very, very weak trend line that today comes in around 67.40 or so. To me, crude oil is still in a sell the rally kind of formation. Now, I don't have any positions because overall, and I mentioned this before on multiple shows, we have a situation in crude oil. Crude oil has a characteristic as a trade, right? It trends sideways in wide bands until there's a disruption to either supply or to demand. Now, the demand disruptions are never spikes, right? They grind. The supply disruptions are spikes, right? Or I should say disruptions. Yeah, that's a good word for it. They're disruptions.
Yeah.
Supply generally grows steadily or falls off steadily. Now, the interesting thing to me from a technical standpoint is crude oil has not made a decision as to when it should move. Now, it's really interesting to me because you look at what happened, for example, in the first Trump administration, right? You had Rex Tillerson as the Secretary of State. He was an Exxon guy.
Oh,
right?
yeah.
He literally was at ExxonMobil. He was the CEO of ExxonMobil, I believe, for a long time. And that did not necessarily result in the sort of lasting drill, baby drill that we might get now. And I think that's partially because climate policies are collapsing under their own weight. Now, the announced cabinet so far is not anyone from big oil, but the energy secretary is someone from big fracking.
Yeah.
Right.
What's his name again? Chris something?
Yeah. Oh, God, it's escaping me right now.
He's awesome.
Yeah, he's a Chris Wright.
Chris Wright.
Yeah. And he's spectacular. And he is, like, in his own way, I mentioned this on one of our other shows, he is to the environment what hunters are to the environment. In other words, he's very respectful of the environment, but he knows that there are responsible ways to draw from the environment. And the way that he has led his fracking company has resulted in outrageous production versus his peers without the kind of environmental damage that everybody fears. So that rhymed. So I think he's a really, really good pick. And that's part of the reason why I think we're going to have tons of supply. But I'm really hoping that you're going to get this sort of spike in demand that should come with some of the deregulation policies. And hopefully it's not too big of a hit on China, because if there's too much supply coming from the US on top of the current world supply, it's an issue for the price of crude oil to the downside.
So tell me this, you mentioned something about drilling and drill baby drill, and I've said it too. 4 years ago, when Trump finished his first presidency, like you said, he did good things in the oil patch, but not any kind of the lasting things that we were hoping for. Is there a notion now that spite plays into it, that they overplayed their climate hand from from before. And now it's like, screw you guys. You wanted $120 trillion for your phony baloney climate thing. And now we're going to drill just to piss you off. Because by the way, it is not above these two political parties to do things to piss the other side off. I don't want that. By the way, I think the environmental issue belongs squarely on the right. That's where, just go to a Ducks Unlimited meeting if you want to see where the crossover is. Hunters love the environment. Farmers love the environment. And anyone who then, when you say that, they're like, oh yeah, the farmers destroyed the environment back in the late 1800s. Yeah, that was a different time. You go to an agriculture concert now, they're into regenerative farming. They're into not monocropping. They're into doing a lot of different things to protect the environment that feeds us. I believe that issue could easily pop over to the right if Donald Trump doesn't blow it by being an excessively drill baby. Does anything make sense there?
Yeah, it does. And I would throw in cattle ranchers as well.
Right? Yeah, about it. Right.
Absolutely have concern, because they to me are some of the best people on the planet in terms of preserving the environment. They literally have to move their cattle around before an area is decimated to where it can't produce cattle feed any longer. Right. So I'm talking about your grass-fed, your open range kind of cattle ranchers, the kind that they depict in movies like, or shows like Yellowstone and that. Those are the environmentalists. They really, really love the land. They're not talking,
but their cow farts aren't destroying us and going to make us all die and change the weather.
Yeah, by the way, I'm trying to get Jorgen on here. You know who that is, right?
I do. Yeah.
Yes. Yeah. I'm trying to get him on one of our shows in order to talk about this and the ridiculousness of complaining about cow farts.
Yeah.
But I really like
the thing that pisses me off most about this discussion, it always has, is that I've given a shit about the environment for my entire life. We have a home that we built in Colorado, all environment friendly built. I've taught my kids to hike, to leave nothing, to enjoy nature, never to disturb it. And then to have all these assholes for the last 4 years look at us saying, you're destroying the planet and we need to keep you from eating meat. They can go to hell. I'm not interested in them lying to me anymore. But anyway, we got a question from Tony Nash. Did you see it, please?
Yeah, we got a comment. Our model is tell us, we'll see. Oh, I can't quite read that. Our model is tell us, we'll see crude fall through the end of the year, then rise in Q1. I don't know what that link in there is. Something like.
Well, that's interesting, Tony, because I was actually thinking that crude could rally on the short term. And hear me out. And I know your model, and again, that's Tony Nash. Tony Nash is as smart as shit. His models are as smart as shit too. So it always makes me uncomfortable when I disagree at all. But I thought on the short term, perhaps demand solutions from the new administration, cutting corporate taxes, cutting capital gains, bringing back, dialing back regulation, could boost demand on the short end. But as Bobby said before, it's 12 to 18 months before we see any supply come to market. So to me, it almost seems like it was an imbalance, and if anything, a bid on the short end. And perhaps middle of next year, when supply starts to come, then we see a break. Bobby, who makes more sense there? You say a washout, so does Tony. So I'll go with you guys, I guess.
Yeah, I do. I think the downside makes quite a bit more sense. And I think this is more anticipation of it. You know, I'm going to bring in a separate subject to sort of back up what Tony's saying. And I don't even know if rising in Q1 makes sense. Again, I hate when I would agree with Tony's models. And I'm not sure that I disagree. I just think when you look at it, I keep thinking about the speed and potential effect of the Department of Government Efficiency on assets. I think we all agree that making the government more efficient long-term is going to be great, phenomenal, fantastic for markets in general over the medium to long term. But over the short term, of the 16 million jobs that the Biden administration claims they added to the economy, 12 million are government jobs. 12 million. I'm not saying that Vivek Ramaswamy, who's a friend of the show, Elon Musk, who we're trying to make a friend of the show, are going to, fire 9 million of those 12 million people. But just let's take 10% of that, right? 10% is what? 120,000 people. Did I do my math good? Yeah, that's good math. 120,000 people coming out of the government payrolls. If they hit 10%, they plan to hit more. And Elon Musk, Donald Trump has given them a target date of July 2026. Elon Musk says it's going to be a lot faster than that. Elon Musk is even taking suggestions on the defense side of things from Cenk Uygur from the Young Turks.
I know
now,
he is.
I love your eye roll there, because my eyes rolled as well. But Cenk made a good point when he brought this up. Thank you, Tony. You can put Tony's next comment up. By the way, Tony Nash.
Thanks, Tony.
What's the name of his company again? Tony's company.
Oh shit, then we get it. We got a club
I'm a
of some
subscriber to it.
it's AI company. Yeah. I'll get
Yeah,
it right
I,
up there.
I actually have a full subscription to that. Pull that up, would you? Because we need people to look at Tony's company. Complete Intelligence. That's it.
Yeah, complete intelligence. I love that.
Yeah, I'm a subscriber to Complete Intelligence. You guys should be too. It's a very reasonably priced platform. Anyway,
Can I say something quick about Cenk Uygur, by the way?
yeah, please.
I remember it was a couple of years ago, and I one time on the Young Turks, they featured a video of me. And he was bashing me a little bit. It was me and Rick Santelli, but he probably doesn't know who I am. So an interview with him, and it was Dinesh D'Souza, and it was a debate between the two of them. And it definitely, he's the kind of guy who thinks because he's big, and they were in close quarters. Like he was almost using his size to be like, like a bully of sorts. And I'm watching the show, like, there it is, Complete Intelligence from Tony Nash.
Yeah.
And what dawned on me, and I'd love it to get back to Cenk Uygur, like physical bullies are always so good at picking the right person to bully. And it is just amazing to me. Like guys like you and I, and again, I don't think I'm the toughest guy in the world, but I will fight you. And we don't get bullied because of that. You know what I mean? And yeah. I was like, God, I wish I was with Dinesh because we'd just be like, okay, dude, say that again a little more slowly and then prepare to lose your teeth. Or I'll lose my teeth. I don't care. Someone's going to lose their teeth. Yeah.
Well,
anyway,
I'm going to
give Cenk Uygur. Yeah.
Yeah. Cenk is, all right, I'm going to save my personal opinions here, but Cenk Uygur, the one thing I will say about him in this particular case is Elon knows Cenk Uygur's a knucklehead, right? That he just screams and does voices and sweats. He's just strange, right? But Elon Musk said, send me suggestions. And Cenk is like, he's reading my suggestions. He's looking at them. Since when has either side done that?
I love that.
And that's something that gives me a lot of confidence in this. So I'm taking this Department of Government Efficiency seriously. And there's no denying, in my view, and I'd love it if Tony would chime in on this, if Tim is watching, any of you guys, and then, of course, you, Jim. If they just start cutting ad hoc, profitable or not, that's going to affect the economy. It's going to affect the jobs numbers. It's going to affect GDP. Yeah. It's going to affect a lot of things. Secondly to that, and then I'll let you talk, there's rumors that there's going to be mass resignations from the CDC if RFK gets confirmed as head of CDC. I applaud that. I'd like to see the same thing in the intelligence bureaus, but that will have an effect on the economy. Am I crazy?
No. So I was on Maria's show yesterday morning, and again, people are coming after me on social media. I've written about this fairly extensively. All of us can agree that we have far, far too many government workers. We have far too many bloated government expenses. That doesn't mean you can change everything in the first week. That could cause a recession that could graduate into something much more serious. If you cut 1 million jobs, those people have mortgages and car loans. Like, oh, we'll give them severance. When Howard Lutnick came out and said, we're freeing them up to be absorbed into the private sector. That's almost funny to hear someone say that. You're firing them and hoping they can latch on somewhere else. And again, many of these people who have been hired into the government, my guess is they're not the most, well, I'll leave that aside. They're
not workaholics.
What's that?
They're not workaholics.
They're not workaholics. They're not you and I. So the point is that if the pace of this is not monitored and measured properly, this could be a bad thing. And by the way, that's what I think the stock market is showing us with this weakness. All the euphoria of the Trump policies and the deregulation sound great, but this hatchet mentality of Javier Milei, that would take some problems. You know what I mean? That would cause some people to not have a good year or so. And I'm not for that. I'm for doing it a little slower. But then I think we're seeing gold too.
So Tony's got another comment, and then I want to throw something your way here.
Sure.
Tony says cutting could hurt government spending, which is a component of government spending. I think he means which is a component of economic spending.
Yeah.
But it would create efficiencies and innovation. We agree on that. The timing of it is what we're talking about. When DOD cut lots of defense jobs in San Diego, it turned into one of the most innovative life sciences and software hubs of the 90s. This is why you need to subscribe to, which we now know is CompleteIntel.com, which we knew the whole time because I subscribed to it. We're just near 60, so it's hard to
we forget things
on the fly like this. But so
Tony, I agree with you. I just want the pace to be proper. I'm saying 100% of all people. Right? What's that?
It's the pace that matters.
It's the pace, and I'm 100% with you. I just hope they don't mess it up by trying to do things too quickly. Haste makes waste. So I hope they don't waste this decent opportunity to do this and make, and again, they only have 2 years. I know that too, because if they mess things up in the 2 years, they could get wiped out in the midterms. But I am for it. I'm just concerned. And I think markets are a little concerned as well. I hope that's reasonable.
All right. So we promised you guys John Kilduff. We want to bring him in and kind of include him in the conversation. So let's bring John in and see what he's got to say about all this.
John Kilduff, how are you?
I'm well, gentlemen. How are you doing?
I love the fact that you're just putting your shirt on as we go. You understand the pace and the formality of the Trader's Edge more than anyone right now.
And he's gone. That's perfect.
And
he's just like, screw these guys. I'm out of here. So.
He's like, I don't need this shit. I'm out of here.
He'll be back any second now.
Good, because I have questions to him. Because the energy stuff.
Let's him up.
What's that? Yeah, the energy stuff is interesting. I want to get him to cut. If I remember correctly, John Kilduff sometimes sees issues from a different angle than we do. Is that correct?
That is correct. And he's also really, really good at the energy side of things.
Really good at the energy side. And he's, this is going to come as a surprise to you, but sometimes I get set in my ways and my opinions and refuse to budge. I know, crazy. But there has been times where he's said some really prescient, impressive things. I was like, maybe that's not a bad thought. So
also, I want to throw out there, Jimmy is speaking in New Orleans. When's that, tomorrow?
Friday.
Okay. And he's speaking about, I want you to give your thesis to John, your palladium and platinum thesis, once we're done talking about energy with John. So go ahead.
Good. So John, first of all, let's talk about energy, but I do want to get to that. We got about half hour left. So John, the oil market on the night of the election, I thought it was very, very interesting. So at first, it looks like Trump's going to win, so oil trades down. I guess these were micro moves. These weren't very big moves. So oil trades down. I mean, I'm looking at it going, okay, drill, baby, drill. Perhaps, that could be depressing the price of crude. However, if, as Bobby always says, 12 to 18 months is when you can get these wells to start pumping, whereas the demand side of the equation, if Trump is really lowering corporate taxes, lowering capital gains, small business optimism may improve, CapEx could be creating demand on the short side. And then all of a sudden the market shot back up a little bit. Which effect on the crude market is more important right now?
Well, and first of all, it's great to be with you guys. Thank you so much for having me. Apologies for some of the logistics here. It's a mixed bag, Jim, I'll tell you, because certainly the initial knee-jerk reaction was the drill, baby, drill. Here we go, new federal lands, and there's going to be definitely more opportunities to drill. There's probably going to be a lot more green lighting of various permits for pipelines, which should also help our stranded natural gas producers. But also, too, does the Keystone Pipeline get back in play? Does the Alberta is in particularly very excited to have Donald Trump coming back to the White House, and there's already talk about more pipelines coming out of Canada to come down south to get to the Gulf and for exports. So there's all that. The issue, though, is the other side of the coin for me, which is the maximum pressure on Iran. Because right now, the global market has really enjoyed about 2 to 3 million barrels a day of supply from quote unquote Iran, but which gets rebranded as either Malaysian oil, Iraqi oil, other country oil, UAE oil, and they do a terrific job of doing these ship to ship transfers and all the like. I mean, Iran has really been ingenious in hiding and getting their export machine to such a degree that, again, there's about 2 to 3 million barrels of their oil in the market on a daily basis. Does that get cut off by the Trump administration? So, it's not that easy of a pathway or a read on what the administration will be doing when they take office in January.
John, we had a brief flash into contango with the futures curve. We had December and January. We had the prices flip into contango. For those of you guys that don't know what contango is, it's when the forward prices are lower than the spot price, and it assumes oversupply. That's an oversimplification of what it is. Do you see that being the case with drill, baby, drill, or do you think the offset of Iran, as you mentioned, Iran's up to what, about 3.8 million barrels a day being snuck out to the global markets? So do you see that as sort of this slight little move into maybe this is not a great thing for prices right away?
I do, and I wouldn't really take too much away from that slight contango that we had right now. I will tell you if that develops, that's sort of like trying to beat inflation or disinflation, in the monetary side in the monetary world, because it's hard to break because these things that the structures feed on themselves. With backwardation, which is the front is higher than the back months, you don't get an incentive to store oil. When that contango kicks in, all of a sudden, that's when you hear about scores and scores of vessels being loaded up with crude oil and parked off the coasts of Singapore and other places around the world to capture that rate of return. We're far from that yet. The bigger issue we have there is really what's going to be happening with China down the road, and whether or not any of these stimulus measures, which continue to be, in my opinion, very half-hearted, half measures, really can get them back in the game in terms of being a meaningful contributor to this price equation. Excuse me, and sorry about that. This price equation, because they're really the key on the demand side. So that's what's driving this brief contango that you saw. And whether or not OPEC Plus then can come together and extend their voluntary cuts even further than they already have into 2025, which is going to be a tough nut to pull off, if you ask me as well.
So I know you are trading crude. So how does this resolve? To me, it seemed like from a technical standpoint, 66 was an extremely important level on the downside. It rejected it several times. You think higher is the path now, the path of least resistance?
I don't necessarily, but I'm also not in the camp that sees, I've heard, now calls for $40 oil, $50 oil. I think the low 60s, high 50s is sort of the landing zone still, Jim, because, you will see a reaction out of OPEC if WTI were to, say, trade down toward the low 60s again. You'll see a reaction by the Saudis, even though it's killing them to do what they're doing right now, which is really to cede market share. And they have all kinds of problems on their hands with both within OPEC and outside it. We're all pretty familiar now with what's going on with the country of Guyana next door to Venezuela there, and their production coming online. The U.S. Folks are really unfettered in their output and their aspirations for more output. So I don't see us going much higher, but certainly the geopolitical risks as we stare them down will give us great additional selling opportunities. I think certainly this is a market where you're selling the rips and buying the dips, as we like to say.
Yeah, Bobby said the same thing, and I'm starting to agree with you. I have another question about. You mentioned the BRICS, you mentioned Saudi Arabia. So, several years ago, we, perhaps for political reasons, perhaps not, started selling the SPR. I've heard some analysts say that there could be some lingering hard feelings. I sell burgers and ribs. If a place opened up next door to me and was selling them to try to drive the price down and people going there and they were selling them at a loss, I'd probably be pissed at that company. Do you think there's hard feelings among the OPEC countries? I meant OPEC and Saudi Arabia, that we were selling the SPR to try to depress the price of oil for perhaps what could be political reasons?
I think to a degree. I mean, look, certainly low energy prices are key to a lot of things, not only political survival, but just the whole inflation picture. I'm always amazed at how, the experts out there try to, sort of write off the energy intensity of our economy and what it does. But man, psychologically, it's a killer for consumers when they're paying $4 plus a gallon for gasoline. The SUV costs over $100 to fill up. It's just not a good scene, and it rips right through to certainly the grocery store prices and other issues. So I do definitely think, and this is why I am actually an advocate of us using the SPR, because we are up against still a cartel of folks who want us to be paying $4 plus a gallon for gasoline. The Saudis are in a bad spot right now. They are borrowing to allow Saudi Aramco to be able to pay the dividend that they promised to the private investment fund there in Saudi Arabia, so the Crown Prince's dreams of NEOM and other things can be built out. But to me, that's on the backs of the American consumer. So you'll never see me rooting for Saudi Arabia or OPEC for that matter. And which is why, I think, we all benefit from the prices kind of where they are now. I can tell you here, full service in New Jersey is about $2.70 a gallon, which is, I don't think rock bottom cheap, but certainly cheap enough where you don't hear people squawk and they can deal with it. But it's certainly not a good price for the Saudis or the rest of OPEC. They definitely want 80. The Saudis would, I think, would prefer 100. So they're not necessarily friends of ours as much as I think people think. Or it's certainly Saudi first in that regard in terms of where they want that price to be.
I think it's a great comment. I think people should realize that ally doesn't mean friend. Ally doesn't necessarily, between countries, doesn't necessarily mean they're rooting for you. It just almost it's exclusively means mutual protection now, more than anything else. So Trump presidency with energy and Russia, Ukraine, where do you see that going? Obviously, there's been an escalation, at least a perceived escalation in the mind of Vladimir Putin and in the mind of at least initially the crude oil markets, right? We got Russia, who's a very important energy participant. Let's just leave it at that. Where do you see that, if anything, any kind of effect from the Trump presidency and this sort of like acceleration that we've seen in that geopolitical strain?
Well, the Russian situation, another good example of just the chessboard got reordered. They really have not curtailed any of their oil exports, despite this whatever the price cap mechanism thing was supposed to be all about. Went nowhere. India bought it up. China's buying it up. So again, everybody's in it for themselves here, wanting to get cheap energy. With President Trump coming into office, I do have to say, I don't think he'll ever have to tap the SPR, because he will have the ability to make a phone call to the Saudis and say, hey, knock it off. I need the prices lower than where you're shooting for right now. Let's figure something else out. I do think he has that sway over the Crown Prince. And then as far as Russia goes, he's not looking to upset the apple cart either in terms of having a price spike. I think probably part of his overture towards getting this thing resolved in his mind will be to allow the Russians to resume or be brought back in to the global financial system, maybe even allow them back into SWIFT. And allow them to be more liberal in terms of allowing them to sell their oil and oil products wherever they want to, including here, because there's an element of their production that we use for diesel fuel manufacturing, for example, this stuff that's called mazout that was helping to cause shortages and impact the diesel fuel price here, pretty dramatically early on in early days. So I think again the oil price, the energy price, gasoline, diesel, fuels, natural gas even, should be steady to lower with the President Trump back in office, in my view.
So when you mentioned Russia and we mentioned Iran, and several different times, including now with Russia, we put price caps on what they can sell and embargoed from what they sell. Every time I read something like that, I think all you're doing is throwing a curveball to global shipping lanes, normal supply chains of crude, and forcing them to reroute. And it'd probably take a 6-month to 8-month period before they figured out how to do it. And guess what? That oil you're buying from now, an approved seller, is probably just Russia oil being white labeled. And there anything, I guess what I'm trying to say is oftentimes it seems like those sort of economic embargoes are asinine, and all they are is for show. What do you think of that?
They don't work, Jim. They certainly do not work. Principally because you don't have everybody on board with it. The Indians stepped right up to buy more of the crude oil out of Russia at a very deeply discounted price, as did China. And China has only reinforced their energy partnership with Russia with expanded pipeline capacity, with importation and longer term deals. To bring that crude oil into China, into their bonded storage, into their SPR. So they jumped all over it. So once you lose one or two key players in these things, it's over, and it is asinine in a word.
Those things are very mafia-like, but without the willingness to use the muscle. It's like threatening, hey, you better buy your booze from us and not from this guy, or I'm going to send Luca Brasi. But we're never going to send Luca Brasi. It's a very useless, absolutely useless tool.
Silly.
So
it seems like it's political, like political grand scheming. Anyway,
gamesmanship.
Yeah.
But
it backfires. It just hurts your own consumers. I don't know what you're achieving. The Russian economy has endured and is fine. It's growing. Last I checked, I think they're at 3.5% for this year. It just has had no effect. Again, unless you're going to go all in with everyone. on the same page, which is virtually impossible, it's not worth doing.
Would you agree that I'm not necessarily afraid of BRICS and a BRICS currency, but would you agree that kind of accelerates the growth or acceptance of BRICS, at least in terms of getting new members?
I mean, they can have all the aspirations they want. If I had a what's the currency of Brazil, or if I had a ruble for every time I've heard the real. So thank you. If I had a real for every time I've heard this over the course of my career, that there was a currency coming along that was going to supplant the U.S. dollar, I'd be loaded with real. So I just don't see it happening anytime soon, and I'm not worried about it. They can, this is the United States, until someone else can finally come along, even China for that matter, until they can finally stand up a consumer-based economy to the likes of ours. I'm not worried about that at all.
So, Bobby, can I give my spiel for my speech on Friday?
Yeah, let's do it.
And I want to hear if you, well, again, this is a live show, and a lot of people have paid a lot of money for this, but it's a long-term thesis. It's not exactly like it's a trading thesis. It needs to be today. So I'm just going to give kind of an overview. There's more to it than this. My thesis for the last 3 years at the Northern Investment Conference has been copper, has been silver, copper, gold. The reasons for those, I think, were evident. Those trades worked out quite well. Okay, over the last 5 years, since the beginning of this new life that we're in, as far as printing money, spending money, boosting M2, gold's up 50%, copper's up 50%, silver's up 70%, whatever. You can go through a whole list. Platinum steady, palladium's down 50%. Now, the thesis of that was obvious. We were moving towards EVs. Copper, silver to a lesser extent, is huge in that. The Inflation Reduction Act gave big tax credits for EVs. It was wonderful. That kind of thing may be reversing now. So there's a couple economists, a group of economists said that if the EV tax credit, $7,500, is pulled back, it could lessen the demand of EVs by as much as 30%. So that has to be replaced by something. So the combustion engine becomes back in again, or hybrids, both of which use platinum palladium. And I'm not sure, like, I understand fully that the self-driving car thesis may limit demand for cars. I understand that Elon Musk is part of the government now, so maybe Donald Trump goes easier on EVs than he would have in his absence. So much of my trade started from a technical trade. It's going to be basically palladium and silver, because the silver part of it is still from conductivity from the rest of the world. I still believe in the electrification story. I just think copper may have been too much of the recipient of a tailwind from a story that might not unfold the way we thought. Poke holes in my thesis, John Kilduff.
No, I think it's mostly right, Jim. It's just amazing to me, though, that the one element that seems to be overlooked sometimes is the consumer. I mean, even with these great tax rebates and credits, the companies are all struggling, save for Tesla, I guess, to sell EVs. Ford's getting his head handed to him every quarter on it, especially.
Which, by the way, you gave $9 billion to Ford a couple of years ago. Thank you from Ford, because they're never going to repay that goddamn loan. But anyway.
Never. I do think silver's getting a bit of a tailwind or Me Too trade from gold and the Bitcoin, sort of the reserve currency, the fears of debasement and all that, more than the industrial side of things. I will tell you, Jim, because I do try to follow this in terms of what the impact's going to be in terms of gasoline demand, diesel fuel demand. It seems that the manufacturers of the batteries are on the cusp of a breakthrough that's been rolled out to a degree, pardon the pun, to make the battery life or ranges for them to just be at exponentially greater, to 400 or 500 miles on a single charge type of breakthrough that's really out there and looks to be proven. Also, too, it's amazing to me. Years ago, do you remember the peak oil theorists back in the day? There was a big book written, I think, "Sunset in the Desert" or something was the thing. I was the guy that got brought on a lot to refute that. Not that I had any big geological edge, but just that human nature advances technology, satellite imaging, all that, and sure enough, didn't fracking come along? It's the same thing with the rare earth minerals, in my view, Jim, that we're finding them in a lot more places than maybe we thought that they weren't. Similarly, so I'm still with you on the copper and the palladium. I think this movement towards reducing the carbon footprint, for whatever reason, is going to stay as sort of, I think, valid with enough folks that it's going to get pushed through. So I think all those commodities still benefit and go up and get squeezed over time. But I do think that the commodity markets especially have a great correcting mechanism. That all saw that I think grates on me a little bit, so cliche, but about high prices, curing high prices will also be a factor and push this thing through. But I don't think the internal combustion engine is going anywhere anytime soon, nor do I believe we're close to peak oil demand, or that oil and petroleum is not going to be part of the mix for a long time.
Bobby?
Yeah, I as I mentioned to you yesterday, or it might have been last week, I think the platinum, I'm not sure about the platinum side of that. The palladium side, I definitely believe in. Palladium has spent most of its publicly traded history undersupplied to the market, right? There's just never enough palladium, and that's always driven the price up. Also, you have this weird situation that one of the largest providers of palladium is Russia, right? So it's a strange way that Russia could kind of hit back if they needed to for any particular reason. The largest one's South Africa, but the second largest is Russia. Still 70% of it's from South Africa, so it's not that big of a factor. I definitely like the palladium side of that. The platinum one certainly could go up in sympathy with it. I will add one thing. Elon Musk, being part of the government, he's on record as saying he doesn't like subsidies.
Really?
And the interviewer saying that said, well, you get a lot of subsidies. He goes, get rid of them. I don't care. Get rid of all of them. He goes, I think if one company's getting them and my company makes a similar product, I should get them too. He goes, but if you ask me, we get rid of all of them. And I think what that does, interestingly enough, if that were to happen, I'd be a buyer of Tesla, because I think that Tesla then captures a massive part of the high-end market without losing that much in the low-end market because they don't have such a large share of it.
Yeah.
So I'm going off on a different subject.
No, I like that though a lot. But I add something too about the subsidies and Elon Musk, because I love when people, because I have been highly critical of the policy of locking down and then giving people PPP money. I was critical of it at the time, and I took whatever dollar they gave me in PPP money for my restaurant without any sort of guilt at all. And everyone was like, that's hypocritical. It's not even remotely hypocritical. And it's not even remotely hypocritical for Elon Musk to say, no, I'm against these subsidies. And they're like, well, you take them. Well, yeah, if someone's going to give me money, I'm going to take it. Like, I mean, yeah, maybe I'm not. Is that hypocritical? It never was. Like when I coached basketball, I hated the fact that basketball was moving towards a much more physical game. And I used to argue with refs. I used to argue with league officials. Like, we don't have to be the NBA. It should be policed differently. But at the same time, I was coaching my team to play physical because it was the system that was there. Or am I just a hypocrite, John?
No, I don't think so. And I've heard these same comments attributed to Elon Musk as well, that he doesn't support them, and he said get rid of them. I'm not even sure the Teslas fully qualify like some of the other companies do either. So I think that's maybe partly why they tried to exclude him. Why he's been excluded, period, throughout anything over the past number of years is a mystery to me too. When he's like landing rockets that get caught by chopsticks.
That was crazy, wasn't it?
About that.
That still blows me away. I don't care if you hate the guy's politics, you got to love the guy's genius, right? Yeah. And also too, I mean, let's just take a look here. So if you try to governmentalize private industry, it looks more and more like you end up with Boeing, right? And if you leave it to the free market, you get Musk and Starlink, and you get Musk and his Starship enterprise and the rest of it. So let's be careful about I think ascribing and ascribing winners and losers here, because it hasn't worked. And
let that be a lesson to anyone who says government can do things just as well and points to the creation of the internet. People forget the government is just people. Yeah. It's just people hired by people who don't know what to do. I'd rather have Elon, who seems to know what to do, hiring people who know what to do and getting it done.
Yeah. And no consequence for failure.
No consequence for failure.
In private industry, there's consequence for failure. I don't know. I mean, to hear what's going on with Boeing right now is reminiscent of me when GM was in a really bad way about a decade or so ago. And it was I heard it was called, they called it government motors, a lot of the employees. back in the day. And I think that's where we're at right now with our aerospace.
John, before we go, we got about 3 or 4 minutes left. So the overall broad equity markets have been weak since the election, essentially. And a couple days after. My belief is that the markets realize that all this talk of firing 100 million government employees, I'm being facetious, cutting back $2 trillion of spending, if not implemented at the right pace, could be market disruptive and a tiny bit scary. Are you still a bull of the equity markets?
I am. I mean, look, we've come a long way. We're at lofty levels. I don't think, any policies that are out there being, dangled by the Trump administration right now, or incoming Trump administration right now, are detrimental to the stock market. Earnings continue to be solid. I'm a little concerned about, as you've been raising here, the debt and the deficit that continues to needs to be funded. The long end of the curve, as you guys are seeing, has been exhibiting some weakness. So that's a bit of a concern. But really, no. And it wouldn't take much for us to get the deficit under control, to a degree. My goodness, there's certainly a lot that can be cut. It looks like it will be cut. That could be a drag on GDP, as we know. But government spending isn't the best spending that we have out there, and that should allow other capital to get freed up. I think there's a lot of pent up M&A out there. I think there's a lot of pent up other regulatory relief that'll come to the bottom line of companies. So no, I think you have to be cautious. When we're in new territory, S&P 6,000. A lofty level, but a number of years ago it was S&P 2,000, 3,000. We all have our hats and things, so no, I'm not worried about it at all.
So I can see a situation where Donald Trump cuts taxes and in the short term tax revenues are lower. At the same time, he's cutting spending, but not as much as cutting the taxes is reducing revenue, and we are blowing out bigger deficits, but we are cutting spending. I could see a situation where the bond market forgives the bigger deficits and gets a little more of a tailwind as buyers. Can you see that situation too, or is it all about the blowing out deficits?
No, we can handle the deficits. Yeah. We shouldn't get too comfortable with them, and people shouldn't, be, I don't think, flip about it. But no, they're believe it or not, in my opinion, they're manageable. And like I said, it's pretty easy to get it down to get the annual deficit down to a reasonable level, and the debt is certainly manageable. I think with our economy and our continued growth and the continued outlook for growing earnings, and look what AI is expected to unleash in terms of productivity and the rest of it. So the basic thesis persists.
It seems to me, and this was a question I was going to ask you, but I'm gleaming from your answers that it is not only possible, but likely. So you can correct me if I'm wrong. I have this question as to whether energy production is enough combined with productivity gains from AI. And we're now seeing things like consumer credit start to look in better and better shape. Credit card delinquencies have actually started to drop. So is this the perfect time for a little bit of this sort of Argentina-like austerity here?
Oh, I do. I think the time has been right for some time, actually. I know the Fed is a little concerned, and they've been, with the rate cutting regime that they've entered upon. But the employment numbers are great. I mean, come on, you guys are there every Thursday at 8:30, looking at these prints of 220,000 jobs. That's nothing in terms of initial jobless claims. Those are spectacular numbers week in and week out. So the labor market's fine. The outlook for earnings is fine. So yes, I think the government can certainly dial it back here without any adverse consequence either to the economy or to the outlook for the equity market, in my view.
So John, you still do the Energy Overview Daily Report, correct?
We do.
How do people, can retail sign up for that, or is it only institutional?
You can, if you write in, we'll put you on the list. It's not it's available. Let's put it that way.
Okay, so tell the people how to find you. Besides that,
KilduffReport.com, again, capital.com. Either way, just ping us and we'll get in touch with you.
Fantastic. Thank you so much for coming on. I really appreciate that. I think you are one of the great minds on the energy markets, and I appreciate it very much. This has been Tradier, the Trader's Edge. I'm Jim Iuorio. That's Bob Iaccino. But by the way, I say this every time. I'm going to say it again. None of this works without the support you guys have given us on both our shows. It is amazing. We are humbled by it. All the retweets, the feedback, the DMs, keep them coming. We love it. We love you guys. Remember Bobby and I's mission. Bobby and I were in legacy media for upwards of 25 years each. We did not love the fact that we were always pressured to say certain things by overzealous producers or sponsors. We didn't love that. Our opinions may be bullshit and wrong, but when you get them on these platforms, they are 100% our opinions, and we're not cuffing them for anybody. Thank you guys for doing it. This is the Trader's Edge.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.